Okay, good morning. Today we're going to talk about reading candles and Ichimoku Cloud and its relationship to support and resistance, and how I like to use it. How I like to use it for adding confluence to our trades and our strategy. Okay, so let's start out here. First, let's go to the Ichimoku Cloud itself. The how I have it formatted. Okay. So first the inputs. Okay, these are not the default inputs. We want to change the inputs here to 20, 60, 120, and 30. The default inputs are for Forex, which is basically 5 days a week, 24 hours a day, but 5 days a week. So these settings now have been adjusted for cryptocurrency, which is 24-hour day, 7-day a week market. Okay, so they're going to be more relevant if you set them here to these settings. Okay, and then the next would be the style here. Okay, there's a lot of other things that include with the Ichimoku: the conversion line, the baseline, the lagging span, first and second lead, and you can see how these kind of look when they're on the chart. It's a lot. Okay, I get rid of all of them. Okay, and I only use the plots for the background. Okay, mainly because and that's it for the style. I just have the plots on the background checked for the clouds themselves. Okay, and mainly because the Ichimoku is more of a trading strategy in a sense that was developed. It's an indicator, but a lot of people use all the other lines and what they mean when they cross each other for an indication of a trade. And I don't use it that way. I just kind of use it in its simplest form to give me confluence for the trade setup that I'm looking for. Okay, because I found in the past when you kind of are relying on one line crossing another as an indication of a trade, then you're kind of using that indicator to show you, to tell you there's a trade set up. And I don't really use indicators for that. And it also makes the screen very full of extra lines and stuff. It gets really cluttered really easy when you have all of the Ichimoku settings on there. Okay. So the way I use it is just basically in its simplest form. Okay, just with these settings, the 20, 60, 120, 30, in its simplest form to give a real just quick glance of support and resistance and where we may, our trend according to that. Okay, so we're just going to give a couple examples here. Let's use Bitcoin this morning. I'm going to just show you here. Okay. Okay. Now, I'm sorry, I wanted the daily. Okay. All right. Now, in its simplest form, just with a glance, the Ichimoku Cloud will tell us the trend. Okay. It'll tell us just with a simple glance on the where the price is. Basically, to summarize it and to keep it as simple as possible, when the price is above the clouds, you're in a bullish trend. When the price is below the clouds, you're starting to go into a bearish trend. Okay, and let's point out some things here. Okay, now notice how Bitcoin this entire year that it's been in a bull trend has been above the clouds. Okay, this entire year. I mean, we spent a little bit of time in our consolidation where we went into the clouds, and basically it just kind of is like this. Like if you're above the clouds, the price is bullish and you're trending up. If you're in the clouds, it's kind of questionable. It's kind of an unclear trade. If you're trading below the cloud, then you are more in the bearish mode. So, obviously for larger trends, when something is under the cloud on a daily level, you're most likely in a larger downtrend. Okay, just like here. This whole time when Bitcoin, after the last rally that Bitcoin had, the last bubble, after it met its complacency point here, and it started to sell down as it went through all the other emotions, of anger and depression and anxiety and capitulation and depression. We were trading under the cloud on a daily level. Okay, so just with a quick glance on a higher time frame, you can tell whether you should even be buying or selling something. I mean, really, it's as simple as that. I mean, it kind of more simplifies it when you know the market psychology and the strategy of market cycles and Elliott wave cycles. But when you have that knowledge and then you add that to just a quick glance in the cloud, it's kind of confirming that, okay, this is downtrending. We're underneath the cloud here, underneath the cloud. It did not start to trend up until we got above these clouds. Okay, so just to simplify on a higher level, how you can look at the time frames and say, well, where's our trend? Where's our trend? Okay, and so back in here when Bitcoin broke above these clouds and started trading above these clouds here, that was an indication that there was an uptrend happening, along with our other factors that we know that when we broke out to about this point, it started the disbelief in the market, and then we rallied on and got to the hope, and now we're ramping our way up. So we want to make sure that the cloud gets respected, even in our downtimes. Okay, meaning that even here after this long run up, we had a deep sell-off, but notice how we bounced off the cloud. That's because we had gotten so far away from our daily support. Okay, we gotten so far away from our daily support that when we sold down, we sold all the way down until we tagged the cloud, and then we started another run up. Same way here. This was about 3 times that we tried to penetrate the cloud, and we did penetrate it a little bit here with a wick. Okay, now we're going to talk more about candles in these next 2 sessions, but we'll start right here with this. This is just a wick. Okay, meaning that's an expansion in price. So these candles are going to show you the high and the low with the wicks, and also the open and close price with the base of the candles. Okay, so we can see that we had some expansions in price that left the cloud area here, but when we consult our true open and close price here, okay, which is the line, it didn't even really leave. We did not open the next day outside of the cloud. Okay, is what the point I'm trying to show here. Now the line chart I use a lot to show me the core price. Okay, it doesn't show us the expansions in price, the extreme highs and the extreme lows. It's just showing us the open and close for that time period. So it's kind of a good indication to get a true representation of price in a time frame. And here I would use it, just like I showed you here, where we're looking and we say, price got way down here and started to leave the cloud, but it was just an expansion in price. We really did not open the next day outside the cloud. In fact, we actually turned around and started our journey up since then. So we have 2 things here where we tried to penetrate the cloud several times here and penetrate our daily support, and we couldn't do it. And we actually even opened and closed within the range of respecting the cloud. Okay, so that's a really good bullish sign that we didn't start trading under the cloud. Okay, there's as a bullish trend breaks down, some of your first indications are going to be that you're trading under the cloud for whatever time frame. Okay, I just want to plant that seed in your mind, and then we'll start looking at some lower time frames. But for instance here, I'm not sure how long some of you guys have been following me or on the WhatsApp service list, but you guys that have been with me for a while remember that right here in Bitcoin, I was looking for this sort of an ABC correction. I was really thinking that we were going to get a deeper correction in here down to about 680 or so, based on the fact that our entire year we had made a huge run up, At that point, it looked like we had done, a 1, 2, 3, 4, and a 5 of our L8 wave. And it seemed like, if we were going to get an ABC retracement, that this was the time it was going to happen. Okay, it really seemed like this was, a good place for Bitcoin to sell down and breathe. Okay, especially because, but to do that, we would have had to break the daily cloud. Okay, so keep that in mind. But on higher time frames, it had room to support a move like that. Okay, which is why I was really looking at something like that happening on a higher time frame. Because we could have broken the daily cloud but still respected the 3-day cloud. Meaning that we could have sold down at this point here, we could have sold all the way down to here and still been bullish in a bullish trend to pull out of here and continue on. So obviously we didn't get that ABC correction there. And I'll show you how that worked out, okay? Why I decided to take that trade and how I managed that trade, based on the fact that it denied my analysis. Because the L8 waves are going to work until they don't work for you, okay? And this would be a situation where, you didn't get the ABC correction you were expecting, and you got a defiance of that and a continuation. And Dash did something similar, okay? Basically, like, you'll plot out your L8 waves and you'll plot out your moves, and sometimes you'll be expecting something like this, like an ABC correction, and then it will get defied. And then you have to, maybe zoom out to the higher time frame and see, okay, where are these waves going? Reassess your wave count and things like that. But today, talking about the cloud and how that gives you an indication, all right? Now, first off, when this sold down here, it sold down from here down to here, okay? So that's how we put our Fibonacci on that. Now, on our way back up, okay, on our way back up, I sold this point right here, the 7.86. Now, I sold that point for 2 reasons. Because I thought that was going to be where we were going to get our ABC correction, okay? It seemed like that was the point that we were going to get our ABC correction from. And because it was the 78.6 right here. Now, it sold off here because mostly, this is a combination of technicals and fundamentals. Because right here where it sold off, it had already started selling and I was in a sell position. And then we got that China news that China wasn't going to allow withdrawals or deposits for like a month. And so we got this huge dump right here, a big dump that sold all the way down here into the cloud a little bit. But it respected the daily cloud. Like once it got down into here and started, pulling back away from the cloud, and I was watching it, I closed my short with good profit. I mean, basically it was a short from like, 1055, went to 1066 there, but I got it at like 1055 and wrote it all the way down to like, 960 or something like that, and then closed. So I was happy with like, $80 some short that happened relatively fast. But I watched my trade here because I saw that it was starting to pull away from the daily cloud. Okay, starting to pull away from the daily cloud. And then the next day opened, okay, and it respected the cloud. It basically, we sold down to the cloud, we opened the next day, and then the next day we also sold down to the cloud and spiked back. Okay, so that was like 2 times that we, respected this cloud. And so I had already closed my shorts here, but that was an indication that, hey, we didn't break the daily cloud on our huge sell-off. And that was a lot of volume, a lot of sell volume, a lot of fear, a lot of panic, a lot of FUD, that fear, uncertainty, and doubt in that day. And it still didn't penetrate the cloud. So that was a really bullish indication for Bitcoin that it was going to continue, okay? First because, it respected the cloud and bounced and defied the ABC retracement that we were expecting to get there, and it continued on. Now, once it continued on, it led into the typical kind of a cup and handle pattern here. All right, and then once this broke, basically like once this area broke right here, that's when the retail traders step in, even with like the extra volume right here. It's a little bit lower here, and then boom, the volume steps in. We broke the cup and handle. And then that's what us, pushed us to continue on. Now, once we got up here, same thing. We had a lot of this, fear, uncertainty, and doubt here with the SEC, and this was a very manipulative day. Even when it sold down here before it pin barred and spiked back up to 1337 right here, it respected the cloud. And then after it rallied back up and sold back down, we respected this daily cloud 1, 2, 3, 4 times here, especially with the open and close of the price. Okay, I mean, this one didn't even get close. That was just a very manipulative dump before a pump. Now you see that a lot, that pin bar kind of action. You see that a lot in Forex, mostly on days where there's like news and stuff like that, which is why I don't really trade Forex on like like days where they're going to announce earnings and statements and stuff like that, because you get a lot of this kind of action. It's very manipulative, and it's hard to get a really good trade out of that. It's really more like, you see it moving, you sell, you buy, and you close right away, and you get a lot of quick profits. It's more like a race, kind of a casino type of day. There's not much technical analysis to these type of moves. Okay. So, but again, we sold down here. We didn't even get close, but we spiked off the cloud. And then 1, 2, 3 extra times that we respected this cloud and we didn't trade under the daily cloud. Now, that's a very bullish indication that, that we haven't broken our year-long trend up. Yeah, I mean, it got really rough in here, and we sold down to about, I think it was like 880 or something here the one day. But it respected the open and close price of this daily cloud. Okay, that's very important, because we didn't break our daily support, and then we got enough strength to rally out of here. So in our bigger picture of our analysis and how Bitcoin should be leading up to that stage where it continues on and gets optimistic, and then belief, and then the thrill and euphoria come for this to manifest its market cycle bubble. This is a very good indication that it defied sub 1,000 prices several times in a row. Okay, it really tried to get knocked down right here, and it wouldn't knock down. So that's the kind of defiance of that it's was very resilient to being sold down right here, and it basically defied being sold below 1,000 and rallied back up. That's the kind of emotion it needs to paint into the market to come back up here and become optimistic again, okay, in our market cycle, to where the optimism keeps moving and it turns into belief and thrilling euphoria. Now, I do think that we're going to get a sell down here before we get up to that optimistic level. And now we would basically, now that we see the direction that this thing is going in, and with the signal that I sent out to you guys yesterday at about 1188, it broke. Okay, it broke its resistance there, and this is where you want to use the Ichimoku in all your time frames. Okay, like I said, I get rid of all the lines and I just leave it on there for background confluence to what I'm looking for. Okay, and so now when we look at this entire move up, all right, since the bottom here, well, first with a quick glance, we have here where we sold off. Okay, here where we sold off, we broke the hourly cloud. Okay, and we started trading under the cloud. We couldn't make it through the cloud here. It faked us out, and still we trade under the cloud until we broke through the cloud here, and then look, we started trading on top of the cloud here. Okay, respecting this cloud all the way up here in our run here, our bull run that we've been having. And this basically has been respecting also this trend line right in here, right about there. Okay, and basically you can put a trend on that too, right from all these points. They have basically 1, 2, 3, 4, a bunch of them here, 5, 6, 7, 8, 9. I mean, we respected that trend and this 1 hour cloud this whole run. Okay, so what I do is I start with the higher time frames, and I flip through the charts and get an idea of where we're going and what we are expecting, and then I really compartmentalize price and break price down into different time frames and what's going on to lead me into an indication of kind of like a chain of events. Like I have a bigger picture through the higher time frames of what I'm expecting according to my market cycle, my Elliott wave theory, my emotional cycle that's repeating itself in the market. And then I'll kind of flip through the time frames and kind of compartmentalize the price into like an order of operations that it would take to change that, if that makes sense. And so, like for instance here, okay. Now, just simple support and resistance here. Right here, we made a high, okay? And then here we made a lower high. And I'm just skipping all this SEC stuff because that's not true to the trend. And then here we made another high. Now, all these highs are getting lower. We made a high, lower high, a lower high right here. And if we pull that over like this, right to there, basically going off of these points, it leads us right to here, which is where we met resistance as well, right here. Okay. Now, that resistive point was also, now we could do this two ways. We could take the entire extreme high to the extreme low. Okay. Right to here. Boom. And that puts our 78.6 right here, retracement level, basically right at this red line. So we have two resistance levels that are lining up here. Okay, the 78.6 of the entire, extreme high to extreme low, 78.6 back up is this blue line right here, 78.6. And that line is meeting this red line of our higher lows. Okay. Now, that was a very good indication that we were going to meet resistance at that point. Okay. So let's just get rid of that real quick. Now, this is how I break down price. Okay. And this is how you kind of need to do this as you're watching price, because it gives you an indication of things changing rapidly, I guess would be the best way to explain it. Meaning that once we got here, we were downtrending again, basically here. Okay, from this point here, we had these tops in here, and then drawing them to these tops, we were having a hard time, basically, from almost this point right here. We were having a hard time making a higher high. Okay, we basically made a high here and hit resistance. We hit resistance again, and now we're making lower highs, lower, 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 and then we just fell down again. Now, this is where breaking the price down into compartments really helps you spot your trades. Sorry guys, let me get this off of here. I don't know what happened there. Okay. Now this first time we hit resistance, we fell all the way down here and we bounced on the support trend and the cloud. Okay. And then we came up here and we started making lower highs again. Lower highs, lower highs. But then right here, we bounced off the cloud again. Not only did we bounce off the cloud again, but look at this volume that came in. Okay, like, we had a nice dump out here. It was a lot of volume by the cloud, but it did not break the cloud. It bounced. But it wasn't enough of a bounce to push us anywhere. We just had to bounce a little bit to where we bounced higher. And then right here, where this volume came in right here, it changed. Okay? Now, reading candles and reading volume is really important, because when you see something changing in the market like that, it's kind of an affirmation, like a confluent factor. Like if I would have seen low volume right here, like not a spike this high, if I would have seen, let's say, like a little spike, like one of these or something in here, it wouldn't have been as good of a bounce for me to try to take a trade on that. But since I see a couple confluent factors here of, one, we bounced right here on the cloud and we broke this little mini corrective downtrend. Okay, so that red line now, gone. We broke that. Okay, we broke it with pretty good volume here too. Okay, so now we basically broke that little mini corrective downtrend and we bounced pretty hard off the cloud here with a nice amount of volume, with a 1 hour stochastic RSI crossover as well, right here. Okay, with a 1 hour stochastic RSI crossed. So we have a couple factors here that, told me to send a signal out on that trade, because we ran into resistance here and we were trying to, we couldn't get through it here. So the price needed to breathe. It needed to dump some people out. It needed to, gain a little bit more support, and that's what this kind of move is. You know, it dumps people out, it kind of slightly bounces, and then right here where it bounced again, that volume that came in was enough of a push to reverse the market. Okay, and the indications of that are, you know, a couple confluent factors. One, just that we bounced off of the cloud and off of our support trend. Two, that we broke this little mini corrective downtrend that this, you know, the top of this wave was in. It broke this little mini corrective downtrend. Three, we're crossing over on our stochastic RSI on the hourly. Okay, so all those factors, when you're just looking and you don't see this part yet. Okay, you know, when I sent that signal out to you guys yesterday, I hadn't seen all this yet. Okay, this was all, you know, in the future, hadn't happened yet. So just looking at this candle right here, this one candle, how it bounced off the cloud, how it had really good volume, and how it broke that little mini corrective downtrend is enough of a read on the market to say, hey, wait a minute, this thing looks like it's going to bounce right here, and it's going to break right through this resistance. Because now it has gathered its strength again. Like, it ran out of strength up here. You know, it ran out of strength. Here was the 78.6, this resistance line. It had to come all the way down and even dump people out. And actually, right here, where it started to dump people out, right in this area, that's where we started to see the volume go into the altcoins again. It's like, you know, the top players and the good traders that are putting a lot of money in these markets and understand technical analysis. It's like they realized, you know, that we hit resistance here, and, you know, it's time to, you know, get out of Bitcoin for right now and get into some alts. And we can almost pull up the two charts comparatively and look in the 60-hour window where, you know, this one dumps like right here, and Ethereum, boom, pops. XMR, boom, pops. So, you know, that shift of money, like, you know, the traders saw there's resistance here. You know, we don't know if Bitcoin's going to continue. Let's sell and put our money back into alts. That's where we saw that spike in alts. Now, just to mention real briefly that, you know, we broke here. Now, Bitcoin's now pushing up again. And Ethereum is questionable right now. It's really testing its support. But since XMR had broken its wedge and its downtrend, it's still respecting that. Okay, and there's a lot of altcoins that are still kind of respecting their trend up, even though Bitcoin is still moving up. Because the first time Bitcoin moved up on this last move up here, they all kind of sold down to the retracement points, and then they kind of bounced. So now they're kind of, you know, stabilizing for the most part. So now we see here, you know, a couple indications that led into this trade, okay? And now how this move itself, okay? Now we have another impulsive move here that broke our resistance line. Okay, so this is now gone. That resistance is gone. But we still have this trend support, and we still have this hourly cloud. Those are the things that we're riding on still, okay? So for this move itself now to break down, because we know that this move is going to come to an end. I mean, I actually think it's going to come to an end, probably at the 1.13 of this move. Okay, now when I did the 7.786, I took it from the extreme top here to the extreme bottom for my 78.6 back up. Okay, basically right there. Okay, that's what this was right here, the 78.6. Now, but when I want to measure this actual move, okay, this move right here that fell off, okay, it gives me a little bit of a different reading. All right, that basically, it's a little bit different. You know, we actually, you know, almost ran into the 88 here, and we kind of came above the 78.6. But I would use this reading off of this move right here for my target, okay? Because what this move here is also painting, and we can only briefly touch upon harmonics in this course because there's just not enough time that it allows. But it's kind of like a deeper layer of how Fibonacci relates to Man, it's basically like just another way of drawing Fibonacci's, but how they make harmonic patterns. Honestly, I mean, I traded harmonics for a while, but they also are so they're so flexible that I don't really like to trade off of just harmonics, because when you have harmonic indicating software, it just will show you the pattern based on the Fibonacci's, but it doesn't take into consideration anything else like the trend, the cycle, where you're at in the Elliott wave or anything. So, but this particular sell-off right here is painting a harmonic pattern. Okay, this pattern right here is, if this were to sell right here at the 88, okay, actually anywhere between this 88 right here and this 1.13, it's considered a shark pattern, which is a bearish pattern for a sell-off. Okay, now I'm looking at this. Now I'm already looking at this without the harmonics, for a retracement back up of where it's going to run into resistance. Okay, and then our obvious points are either going to be, right here at this double top area. Okay, the 88, which is where it's kind of consolidating right now, the 88.3, or it could expand all the way up to this 1.13. And I think that this move might actually take us to the 1.13 because our higher time frame strength is very strong. Okay, look at like our 3-day. Okay, our 3-day is very, very strong, growing. Our weekly is also wanting to grow. Now we could dump down, we could hit this 1.13 here at like 13.10, 13.15, and we could literally hit that point and dump down to 1100, and that's really not going to affect the weekly. Okay, well, like that little consolidation or correction won't affect the higher time frames so much. So meaning that, out of all this, after we get a correction from this move right here, we're most likely going to continue to higher highs. But this move that we're on right here is eventually going to come to a point where it's out of energy, where it's out of energy. And so how would we spot a move like that breaking down? Okay, well, the indications are going to be, first, how it breaks the cloud and the support trend. Okay, so we can see now that if this thing breaks the hourly support trend here, this hourly cloud, then we're going to get a correction of the whole move. So that's kind of obvious, but there's a lot of price that you could get out of there before that happens. So first, let's just mark off our potential target area. Okay, so basically our potential target area for this shark move that it's painting is anywhere in this area. Okay, basically anywhere from where it's at to the 1.13. Okay, so I'm going to be looking for this thing to sell off anywhere in this area. It could sell off right from where it is. It could be running into this resistance at this point right here and sell off. But there's ways that we would compartmentalize the price again to see something like that happening. Okay, just on the bigger time frame, it's telling me that this move could extend all the way up into this area. Okay, before it starts harmonically running out of its energy, because this is a long run up that basically is going to, this end would be the 1.13 extension, meaning that we came all the way up 78.6, 88, 1, we didn't double top, and then we went to the next extension. So this move is painting like it has the energy to do that. So we want to follow it now because, we got into, I'm not sure how many of you guys got the signal or not, but I got into some long positions right here around like 1188 or so, and then added to them about 1203. So and on some leverage too. So this is like some really nice, up 100% on leverage at this point. So we want to watch this move and see where it could where it's going to break down, where it's going to fall apart and do a retracement of the whole thing. So that's how we watch it on even smaller time frames now. And let's click down one to the 30-minute. Okay, now here we've kind of been respecting the the trend, but we've fallen into this here where we bounced off the hourly cloud twice. We were in this half-hour cloud. So on the half-hour level, the trade wasn't so clear. Okay. Now let's go down another time frame here. Okay, 15 minute. Okay, now in the 15 minute, since we bounced right here, it seems pretty nicely like it's respecting this 15-minute cloud. Okay, we made a nice impulsive move up. We kind of flagged out a little bit. Okay, kind of flagged out a little bit. We did a little fake out right here and then sold down and then boom, sold down to the cloud. So this is where, impatience isn't rewarded. Anybody that thought this was going to continue right in here, they should have been waiting for it to drop a little bit more. Okay. And where did it drop? It dropped to the cloud. And it bounced off the clouds twice here. Okay, twice. Now, both with wicks. Again, we look at the open and close price. The price didn't even really come into the cloud. Okay. So now we're getting kind of indications of what's holding this move up. When this move breaks down, how's it going to break down? Okay, this is how we want to track the price. Okay, let me see. I don't know what this line is there. Let me get it out of there. Oh, it's the Fibonacci. Okay. Okay, so this is this actual white line right here. This is our 88.3 of our Fibonacci. So you can tell it came up and it's kind of, fell under it, bounced off the cloud, and now it's above that 88.3, trying to continue on. So now this is how we would watch the price. Okay, we would watch the price in its relationship to this time frame that it's moving in now. Okay, because if we want to get out of our long position and see where this move is coming to an end, then we're going to want to watch it on smaller time frames. We already have our targets laid out from our higher time frames, but we want to watch this move on the lower time frames now to see how it's going to fall apart. How it's going to start to break down. And that's how we would, track it like a 15-minute window here. So here, we've been respecting this 15-minute cloud. Okay, we're actually above this line right here. Okay, this white line, which is part of our Fibonacci on the higher time frame, meaning that this was our 78.6 right here. This is our 88.3, and this is our 100% right here. Okay, so as this moves through this 15-minute time frame now, we want to watch it. We want to track it. We want to watch, okay, now let's say we're getting a little bit of a crossover here on the 15-minute, but it doesn't look so strong. So we might actually, flatten this out, get another oscillation down, come down here into the cloud again. But what we're looking for is a respect of the cloud. Okay, obviously, I'm sure all you guys know, and you probably thought when you first started trading that the price moves, fast and all of a sudden all the time, but it doesn't. The price goes through different phases of impulse and consolidation, retracement, correction, and then we have to work our way back up to the impulsiveness again. So right now, this is kind of ran out of its impulse. We had a lot of impulse action here that brought us to a higher price level, but then as it started to fall out, the impulsiveness started to fall out, it's retaining this price level by running into, this cloud. It bounced off the 15-minute cloud a couple times here, okay? And actually now this, we may even get a little bit more buys coming. So this is where we watch it on like a smaller time frame to see how this thing is going to respect the cloud and if it's ready to, impulse again or if it starts to break down. So this is, two indications here. Okay, if this thing is going to continue on up to our higher levels, up to our 1.13 area up in here, it's going to have to respect this 15-minute cloud, and it will most likely, consolidate in this area, maybe even come up a little bit, fake some people out, and then dump down to here, and then boom, bounce again. But until we break this cloud on the 15-minute, we're still moving up, and you can see here our trend line that we've been riding on for almost a week and a half since that 888 or 900 bottom. This is that line, the green line. So we're looking for a couple of factors here for how this move is going to continue or how it's going to break apart. Okay, so as we track the price here, we want to make sure that on the 15-minute level it respects this cloud. And as we move further, this is future prediction based on open and close price and averages and support. So as this moves here, as we get to this point in time, more cloud will print. And if the support is, growing stronger, that cloud will print higher. Okay. So now we're watching this move to see, okay, is it going to fall apart or is it going to continue on? So if we get a cloud bounce here, we're most likely going to, bounce off of our support and continue on and work our way up. If we start to fall into the cloud, then it starts to get into the, unsure zone. Okay, we're not really sure what we're going to do here yet. Is it going to, work its way out of the cloud? Is it going to try to bounce off of the support line? Those are the kind of ways that you look at this trade now, because right now this still looks very bullish. Very bullish. Yeah, I mean, I'm sure some people were expecting this to hit 1250 overnight, but that doesn't work like that. It has to climb in layers and tiers. Okay, sorry guys, my computer's doing that thing again. Let's fix it there. So that's where we're watching for this to break apart. Okay, we're watching for this to respect this to respect the 15-minute cloud, and then either bounce off this 15-minute cloud or start to break down into the cloud, and then the next layer of support would be the trend line. Oh man, sorry guys, I live kind of far from town, so I actually did not get a new computer yet, obviously. Okay, so we're waiting for this thing to now show us a confirmation here that we're going to bounce off this 15-minute cloud, or we're going to break down into the cloud and then challenge this support trend line. Okay, and then we want to watch that on different time levels, on different time frames. Okay, let's go back to the hourly. Okay, now hourly, we're very high above the cloud. Okay, now meaning that for us to get down here and challenge this 1 hour cloud and challenge this line, we're going to have to go through the 15-minute cloud. So it kind of, sets yourself up there when you're looking through the charts, that you can kind of tell this thing's riding on a good support trend, but now we're up away from the 1 hour cloud after we bounced, and we're now in this area, we're riding on a 15-minute cloud. So we can kind of compartmentalize the price and now watch it on a 15-minute level for how this move could either continue or fall apart. For it to challenge this line here and challenge the 1 hour cloud, it's going to have to fall through the 15-minute cloud. So if we see here that it falls down here and it doesn't bounce on the 15-minute and starts to come into that cloud, that could be an indication right there. Okay, maybe we want to close some of our longs, and because it's starting to fall apart a little bit, it's starting to work its way down. And just kind of compartmentalize it like that. Basically, like, I'm watching this move now because I have some leverage longs open. I'm watching this move on a 15-minute window to see how we're going to respect this cloud. Okay, are we going to keep consolidating in this area and get another cloud bounce and continue on, or are we going to start falling into this cloud and breaking apart and having the whole move break apart? So that's how I would use the cloud. Like, now this is how I've used it for like margin trading, and even on the 5-minute, guys, like for real, like you can literally, I don't use the 1 minute or 3 minute too much because it's just too fast. But I mean, even here, like you can kind of see, like, okay, we came into the cloud a little bit here, a little bit underneath, but here, like, we're above this 5-minute cloud, or kind of like in it a little bit. Okay, so we want to see, that would be, if we fall underneath of this 5-minute cloud, then that's the kind of the indication that, okay, we're probably going to head close to, the 15-minute cloud. And then, you just kind of break it apart, time frame by time frame, like that. And so in bigger moves, like on like some altcoins, for instance, we would be looking at the cloud for confluence in where we think our price is going to go. Okay, like let's look at XMR. Okay, XMR. Okay. Now, come on. There we go. Okay. Now first, XMR seems very much like it broke its wedge. Okay. It's falling wedge here. Now, yeah, this is taking a minute to turn around, but Bitcoin's also moving up. I mean, as soon as Bitcoin sells down, you can expect these things to really shoot up. But this is what I was just mentioning, that this thing, already started its reversal and broke out of the wedge. So even though Bitcoin's moving up, this is still trying to continue on, okay, trying to move forward. And the indications that we're going to get, we're looking at a 12-hour now. Okay, look, our 12-hour is pretty strong, growing. Okay, let's look at our daily. Also growing, okay, after it spent like almost 2 weeks in an oversold condition. We've now, since we broke out of the wedge, we've now been growing in our strength. Okay, growing in our strength. Now, you can see, like when we look at this on the 6-hour, this thing's working its way away from the wedge and really trying to get back on top of this cloud. Really trying to work its way back up on top of this cloud. Now, if this thing works its way through this 6-hour cloud and gets on top of the cloud, that's the kind of a move that we're looking for this thing to bounce. Okay, we're looking for this thing to work its way above the cloud and then maybe come back down, bang, and then bounce off the cloud. Because the cloud is our support. Like we're working our way back up to where we want to be trading on top of the cloud. Right here we came through the cloud and we started to trade under the cloud. But now we're trying to work our way back on top of the cloud to get our support behind us for us to rally out and make another move. Okay? And we see that on a lot of the coins. On a lot of the coins. Let's go through here. Let's look at XEM actually. XEM is bounced off the... sorry guys, this is like the ghost in the machine here. Alright, XEM. This is the one I was talking about in the weekly review video that is just kind of on a tear. Now you can see how much this thing has just, and through all its movements in the last like 2 weeks, it has really respected this 6-hour cloud and this trend. Okay, so every single time that it seems to bounce, we're riding a trend here. Wow. We're riding a trend here, and then we get a nice bounce off of the cloud here, and then we get a nice bounce of our support trend. And I wouldn't be surprised if this thing, consolidates in this area, has trouble around the 1700 mark or so, and then falls back down to the cloud and bounces again. Okay, but this move itself, this entire trend that it's in, is not going to fall apart until it breaks this cloud. Okay, until it breaks this cloud. So we're using the cloud to tell us, where we are as far as, our support, our resistance, and, how our move is going to break apart. If this thing falls under the 6-hour cloud and starts trading under the 6-hour cloud, then we're going to start downtrending. Okay, it's as simple as that. I apologize, guys. This is getting out of control, and the only way that it really stops is when I reboot my computer. Come on. Boy. All right, well, let's see what that does. Back to Bitcoin. I apologize, guys. This is just like taking over my computer here. So we want to always keep that cloud on there, guys, and kind of like really tell us in every time frame where we could be heading, and what our support and our resistance areas are, and how our moves are going to fall apart. Okay, how our trend is going to fall apart. It's basically like keeping track of our trend. Okay, if we have, like for instance, for right now, like we pointed out on the 15-minute, we're riding on a 15-minute trend here above this 15-minute cloud. Okay. Wow. Okay, this is... If you guys have kids, don't let them watch movies on your computer. That's why. I got 3 kids, and they want to always be in Daddy's office and watch movies on the computer. and it's a touch screen, and that's what happens. Wow. Okay. This is literally just falling apart on me, guys, right here. If you guys all stay in the chat, I can reboot the computer and be back in like 2 minutes. But let me give it one more shot here. All right. It's just getting really bad. I apologize, guys. All right. Wow. Okay, I can't do anything here, guys. I have to reboot this computer. If you guys stay in the join me chat, I'll be back in just 2 to 3 minutes. Again, I apologize. But I can't do a presentation like this. The computer's just doing its own thing. I'll be back in just 2 to 3 minutes.